The company that we decided to focus our attention on and how they use the schedule of cost of goods manufactured, the cost of goods sold, and the income statement is the Ford Motor Company. We chose to analyze this company because they're a manufacturing company and they would use the schedule of costs of goods manufactured because they take raw materials and make them into their vehicles.
To begin our analysis of Ford Motor Company, it is necessary to go over a brief history of the company. To begin, Ford Motor Company's vision statement is, people working together as a lean global enterprise for automotive leadership. This vision statement is the guiding principle that enables Ford to continue to be a leader in the automobile industry. Ford Motor Company was founded in 1903 by Henry Ford, who was a notorious business leader, innovator, and inventor of his time. Ford sells its vehicles under the Ford name, which some examples of vehicles include pickup trucks, compact cars, and SUVs. Ford also sells luxury vehicles mainly under the Lincoln brand, but other automobile companies that are owned by Ford include Land Rover, Jaguar, and Volvo, to name a few.
Since the initial IPO of Ford Motor Company, which occurred in 1956, the stock has seen periods of steady growth, then rapid growth and decline.
The graph on this slide consists of stock data before the financial crisis in 2007. Before the financial crisis, Ford Motor Company stock was pretty consistent, and like most companies, when the financial crisis hit in 2007, their stock had a sharp decline, and then had a large upswing when the economy began to recover, and their stock has remained relatively consistent since.
In this slide, we are going to walk you through how to prepare the schedule of cost of goods manufactured. Every financial statement must start with a heading which contains three components: the company or corporation name, the schedule you are preparing, and the time period. Then we delve into the direct materials component. Here we begin by starting with the direct materials beginning inventory and add the direct materials purchases to get the materials available. Then we subtract the ending direct materials inventory to get the direct materials used in production. After that, you add the direct labor costs and manufacturing overhead to get the total manufacturing costs. Then you add the beginning work in process and subtract the ending work in process to get the cost of goods manufactured.
Ford Motor Company does not release this statement because they are not required to disclose it, so the data we put together is based off of the industry averages. This is based off of the steps that you previously just heard.
In this slide, we will be taking you through how to prepare the schedule of costs of goods sold. As with every other financial statement, we always start with the heading. Notice that next we take the cost of goods manufactured, which we already prepared above, and add the beginning finished goods inventory. From this, we calculate the cost of goods available for sale. Then next we subtract the ending finished goods inventory, and lastly we calculate the cost of goods sold.
The schedule of cost of goods sold is found in the income statement. The statement of cost of goods sold is a direct cost attributable to the production of the goods sold in a company. In the case of the Ford Motor Company, the three components that are needed in order to produce this statement of cost of goods sold are cost of sales, selling, administration, and other expenses, and financial services, interest, and operating and other expenses, which is the raw material that is given.
To make the statement of cost of goods sold, first there needs to be a title. This will consist of the name of the company, which in this case is the Ford Motor Company, the name of the statement, and for the time period which the statement is going to be based off of. In this case, we're using the data from 2016. The first step is the cost of sales, and from that, we will add the selling, administrative, and other expenses. Next step is to add the financial services, interest, and operating expenses. From those steps, you produce the cost of goods sold.
To prepare an income statement, as any other financial statement, you start with the heading. Next, you add up all the revenue accounts, and then you add up all the expense accounts. After that, you compute the net income by doing revenue minus expenses.
This is the raw data that will be used to construct the income statement. Notice that the information from the cost of goods sold carries over to the income statement.
To first start the income statement, you'll follow the steps are previously stated, which begins with the header. Then you'll add the revenue accounts, which in this case consists of automobiles, financial services, and others to get your total revenue. Then you will add the expense accounts, which is also the cost of goods sold account. This includes the cost of sales, selling, administrative, and other expenses, and also the financial services interest, operating, and other expenses. Then you will add up the rest of the expense accounts and get before income taxes. Then you will deduct the income tax to get the final net income.
This is a screenshot of Ford Motor Company's actual consolidated income statement. Notice how the cost of goods statement is located in the expense accounts on the income statement. For this project, we used the most recent data we could find, which is data from 2016, which is found all the way to the right of the statement.